Good afternoon, everyone. My name is Ram Damija. Welcome to my channel. Today is 26th of September, Friday, and it has been a capitulation day for the market. I know capitulation is a strong word to use when the market is down about a percent, but the way the market has fallen and the way it has continuously been falling for the last 6 7 days, it's some sort of a mini capitulation for sure. What happened today was overnight there was a announcement by US that they're going to impose 100% tariff on pharma, branded pharma, not generic, and that was a dampener, a sentiment dampener. And we had been seeing for many days that both pharma and IT have been down tremendously, and that just kind of gave a fillip, and all the pharma companies reacted. Although the impact of this might not be too much immediately, but of course there's going to be some impact because some of the companies have exposure towards branded pharma as well. Though in my understanding, and I haven't gone deep into it, the impact will be more towards European companies who have branded products, or companies in US which are making their products outside. It's going to have an impact over there, but even Indian companies have exposure, and pharma is a decent exporter for us. So it's a sentiment and negative. It might not have any material impact, like the H1B is not going to have an immediate impact, but these things, each one of them adds up. So the correction that we are seeing in Nifty, which is now gone to at 24,655, was perhaps not meant to be. But first the H1B news came in, which was not factored in. Then when the market was stabilizing around 24,900, 25,000, then this news came in, and today we are at 24,657. Yesterday we closed at 24,900. So you can see this deep cuts coming in. These are all because of news and announcements which haven't been factored in. So if these kind of things keep on coming, then I mean it'll be very difficult for the market to hold on, or for that matter rise up. It is still, I would say, holding on. This is not a very even though the correction has been from 25,400 odd levels. It's been a 800-point correction, which is about 3%. It is not like a 5-10% cut coming in, and it has happened gradually over the last 7-8 trading sessions. So it's not a complete washout, but it is the market which was supposed to consolidate between 25,400 to 25,000. That was my understanding, that after a 1,000-point up move, at least 300-400-point consolidation should be there. That has got overextended now. Now that extension is now, as we see, 24,650 odd. We don't know where this is going to stop. Now, if hypothetically tomorrow over the weekend there's some more bad news that comes in which is not factored in, I mean the market can't take out so many things. On top of that, there are new IPOs which are coming in. There, on top of that, there are a lot of QIBs, a lot of promoter selling. I mean, there is a lot of paper which is coming in, and FIs have been on a continuous sell spree. So, all these things add up, and the market somewhere, then struggles to go up. So I'll take you through all of that and more in today's video. So let's begin with the Nifty chart. This is the Nifty chart for today. As you can see, we opened over here, slight gap down at 24,839. And from there, we have just been like one way. We were okay actually till 1 o'clock, but after that 1 o'clock, that brutal sell came in, which took away all the put stop losses. And, even the VIX, etc., has risen by 7% point. So we are now at 24,600 odd with some 10-15 minutes to go. So it's been a complete washout. If you look at this chart, this is an important chart. This is the daily chart which I show you. So now, as I had mentioned over there, this is a support 24,600, and then the next one 24,200, 300 odd levels. So this mini support, you can say in a way, is kind of being tested right now. Let's see whether we are able to defend this or not. But then the really big support is going to come at 24,300 odd levels. Now I hope that particular one at least holds, because otherwise then the entire GST rally, which kind of began from somewhere around 24,300, is under threat, is absolutely under threat. So that would mean that all the good news is gone for whatever it is worth. And now it's been almost 1 year since the consolidation has been happening in the markets. This actually started somewhere over here in September 30th, and this is September 26, 25. So it's been 1 year of consolidation where our markets haven't gone anywhere. And we made the bottom on 7th of April, the tariff day, which was there. And from there, we are smartly moved up, and we are now within this range. So My hypothesis again is, now if there is no more bad news comes in, then this level should hold. 24,300 should hold till about 25,600. That's a very big band for us to play with. 1,300 point band to play with. We can go down, go up a bit. If it goes any further down over here, then there is some more deep trouble for the market that we don't know or don't anticipate. And in my opinion, that will be a good opportunity to add. As is always, at any correction, I've been saying this to my clients as well, that any correction that the market presents itself as a buying opportunity 2 years down, you're going to view this as a buying opportunity. So same thing happened in February, same thing happened in April, when the markets actually cracked. So when the market goes up, it will not give you any chance to build your portfolio. So these are the times when you can actually deploy a lump sum slowly, and of course continue with your SIPs. And if anyone is interested in creating their portfolio, if anyone needs help in making their mutual fund portfolio, they can reach out to me through the Google form in the description below. You fill that up, and I will contact you. And I help people build mutual fund portfolios. I'm a registered mutual fund distributor. So if anyone is interested, you can kindly do that. Because there's sometimes a lot of hand holding that's required especially during such times. Now let us look at the OI change. What happened? There are about 8 crore calls that have been written today, with a 2.8 crore puts. So that's significant, and this is the first 20 strikes only. If you look at the total open interest, that's now at 0.53. 0.53 is very, very steep. So there's a huge gap of 15 crore option contracts which is opened up. Now let us see the close strikes. Over there it's slightly better, it's 0.75. So the difference is not very huge in the close strikes, but you look at the other strikes. So people are writing calls like nobody's business. 25,500, 25,600. I think it's, people are viewing it as kind of free money, that any OTM calls are being written, any amount. So you can see that 15 crore gap is there. Now let us look at where the indices are from their all-time high. So PSU banks have made some sort of a comeback in the last few days. It's just 4% down from its 52-week high. Metals, as I have been maintaining, they have been doing well. Metal and metal companies. So it's a movement towards hard assets which is happening worldwide, and that is also getting manifested in the price of gold and silver, as you can see. So even metal companies are doing well. So they are just down minus 4.1% from the top. Autos, due to the GST news, had actually covered everything from its 52-week high, but it is now down minus 4%. Finance and banking is minus 5 and minus 5.64. Nifty is now broken 5%. It's down minus 6% from the top. It had actually reached minus 3%, but now it's at minus 6%. Mid cap is at minus 6.79%. And then private bank, small cap. Small cap is something that is also cracking. In the last 2-3 sessions, we have seen that small cap, which was holding out well, has started to crack now. So small cap is now at minus 10%, and Pharma, the big one, it's at minus 10. So Pharma was doing all right, but after this news, it has just tanked. I'll take you through what happened in Pharma today. Nifty next is at minus 13. FMCG again has started to go down. So that all those good news impact of GST etc. is getting away. So it's a brutal market out there. Alpha is minus 22 and momentum is also minus 22. IT minus 26. So it's broken even minus 25. And there's no point talking about media and reality, which have not been performing for a very long time. So just to give you an example, IT, which is down minus 26.8%, will need to go up 37% to make its all-time high. This particular column of H basically shows how much each index has to go up to reach their 52-week high. So in the case of, let's say, momentum, it has to go up 30%. IT has to go up 37%. That's huge. This is how the chart for today, what happened today in all the indices. So IT is again down minus 2.5%. This is very, very tough for IT. Small cap is cracked big time today, 2.12%. So there's some panic in retail which is setting in. Pharma is minus 2%, mid cap is minus 1.9%. So, and also I had maintained small cap and mid cap are very richly priced. So, they are somewhere getting corrected big time. Energy is down minus 1.2, banking is down minus 1, Nifty is down minus 1%, FMCG minus 0.48, which is the least, and VIX is up by 6 percentage points. I know it's a percentage on a percentage, so it's not, it's actually not 6%, but yeah, for the lack of any better word. So it's at 11.4% VIX. Maybe someday I'll explain how VIX is calculated and So this is the Nifty Pharma. If you look at the Nifty Pharma chart, it's been an underperformer from for a very long time. So maybe this might be just the bottom starting of bottom formation. I don't know, but it's been rank underperformer. So you see, 1 year it has given negative returns. 5 years also it's not done much. It's just gone up by 85%. And this is from the COVID bottom. So there in like a lot of indices have gone up 3x over here. It has just hardly managed to double. So pharma will have its it I remember in 2017 odd, pharma was one of the hot sectors. So each sector has its own destiny, and when it is in vogue and when it starts to do well. And then there are these cycles like till 2020, that was a consumption cycle. So all the FMCG names, etc., were doing well. Banking names were doing well. And 2020, after that, PSUs picked up pace, infrastructure picked up pace, realty picked up pace, small caps picked up pace. So, these are the sector rotation that keeps on happening. Then 2023-24, defense picked up. So, neglected sectors, they have their time, and the sector rotation keeps on happening. So it is very, very difficult for a retail investor to pick up sectors and, take a big bet. So it is best to invest through mutual funds, which give you exposure across all the sectors. So let's say if you fancy a sector, you pick up a momentum mutual fund. Again, no recommendation, but just trying to explain a concept over here. So any stock, any sector that is in momentum will get captured in those momentum mutual funds, and then you ride the wave. So that is why creating the mutual fund portfolio in the right way is very, very important. And that is where a lot of people, they do not take advice. They sometimes think that they know everything, but there are so many nuances even in creation of mutual funds, which can give you that slight edge which is there. Now, coming to Nifty IT. Now this is the Nifty IT chart. Sorry, just before that, I would like to take you through the pharma biggest loser. So Sun Pharma is down 2.5%. Loris is down -7. Biocon is down -4.6. Zydus is -4, and so on. So it's been a bloodbath today, where all the names are going down, except for Torrent and IPCA, which are slightly in the green. But otherwise, it's been a bloodbath for Nifty Pharma and also for Nifty IT. Nifty IT again, you see last 1 year -20%, last 5 years 71%. So it's been a terrible index. If you look at the names which lost out the most today, Wipro, Infi, TCS, HCL, and Tech Mahindra, all losing between 2 to 2.7% today. So it's been a tough day for pharma. Now let us come to the international scenario. What is it stating? Everything is looking okay. Nasdaq futures is slightly down. It closed slightly down yesterday. Dollar index is slightly up. So dollar is finally gaining some strength to 98. Brent oil is another movement. It is now closer to 70, which is never a good news for us. I think this is on news of some Russian oil supplies, etc., getting restricted. So it's at 69 now. Our currency is now approaching 89 very, very fast. We should be there anytime. Gold has just taken a small breather from 38.10. It had made to 37.80, but it's inching up back. Silver has not taken any breather. It is at all-time high again today. And Bitcoin is below 110. So I will take you through what is happening. There is a silver chart. So you can see last 1 day 0.5, last 1 week 5% up, last 1 month 16% up. Last 6 months 30% up. So it's just been going up, and even last 1 or 2 days it has made an all-time high. So silver is on a tear, and there are news predictions of that it will cross 50, it will cross 70, it will cross 100. I don't know, but it's clearly in momentum, and it's been suppressed for far too long. So when it gives a breakout, it's going to be big. This is the silver. This is the chart which shows what is the market cap of all the highest assets in the world. So if you look at gold, it's valued at 25 trillion. Nvidia is at 4 trillion. And silver has actually beaten now Bitcoin. It is at 2.5 trillion. So Bitcoin valuation is 2.2 trillion. Silver has now beaten that and gone to 2.49 trillion. So that's good. So silver is finally finding its day in the sun, so to say. So that's good news. And this is what is happening in the crypto space. So if you look at the change in the last 7 days, Bitcoin has fallen 7%. There's something wrong with Ethereum also. It's down -13%. Then Tether is okay. It's tied to USD, so that's it's flat. But if you look at the other like Solana and Dogecoin, I don't even know their names honestly, but they all are down. So there's something happening in the crypto space which is in which they have cracked big time over the last 1 week. And especially I have been reading some news on Ethereum, etc., which has been going down. So you can see that this sharply down 13%. So, but honestly, I don't have too much expertise in this field. I just track it because you know how the money supplies flows from one asset to the other, it impacts. So for example, there was a discussion that if you know, money supply moves out of these crypto coins, then it might get into gold and silver and so on and so forth. So it is going to impact every asset price, because now it is serious money that is there in cryptocurrencies as well. So any dent over there, any money taken out from there is going to move into the other assets as well. So now coming back to the markets are weak, the open interest is weak. This correction which we are seeing should actually not have been there, but it's okay. These are all part of healthy corrections, but this news flow has to stop. Every day there is some negative news flow, mostly aimed at us, which is not good. It's you know, we are the most impacted amongst all the countries in the world, all the news flow that is coming in from US. So let's hope that this settles down soon, and once this settles down, once you know, the market finds some stability in terms of news flow not coming in, then we can start focusing on fundamentals and growth and so on. Another thing is that gold and silver have to also, you know, somewhere stabilize, because they are also, they indicate the kind of risk that is existing in the markets. I will try to do a video regarding, you know, what the price rise of gold and silver is indicating, and how it is tied to the US monetary system, and how it indicates how the movement of currencies is happening. I will try to do that video, but that's a long discussion topic. But they are also an indicator of how much risk is being felt in the world market. So a lot of money is moving from treasuries into gold and silver, and a lot of central banks are purchasing this. So it also somewhere shows that there is slight fear in the system. So their prices also have to stabilize, and once that happens, then, you know, our markets are now, at least for the large caps, are fairly valued in my opinion. Small cap, mid caps are still expensive. So we might see some correction, consolidation, but as I said, you know, every opportunity of correction, consolidation is a good opportunity to accumulate in the long term, because our currency is also going down. So you know, once the currency goes down, then the fair value of the market actually has already come down a bit. So you know, every correction should be seen as an investment opportunity if you know what you're investing into. And that is where I maintain that mutual funds usually are the best route for a retail investor. So that's it from me now. I hope you enjoyed the video. If you did, please kindly subscribe to my channel. A lot of you see the video but don't subscribe, so kindly do that, and kindly like and share with your friends. I shall see you soon with another update. Take care. Bye bye.